Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, August 15th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Thursday, everyone, and welcome to the pre-market video here. Here's a look at the ES in the daily time frame right now. You'll notice a steady comeback here to the upside after the strong morning low. Failed new low here with a bullish outside day at one point here to the upside, pushing through the midpoint here of that rejection tail and seeing a further squeeze. A couple of days ago we noted the 2-day narrow range and how that could lead to a breakout over the next 2 to 3 days, and we're seeing that play out in full effect. As a matter of fact, right now 55.17.5 is the upside, the low range upside target from the breakout low. And so we have reached it now at 55.17.5 with a shot to continue higher toward that 55.55 half FOMC key level above. Again, when we get ourselves a newly minted FOMC key level, if it is offered straight away first, the first rejection, that's a strong low, would tend to suggest a snapback to that level. So we still have upside continuation toward 55 half up above over the next couple of days. For today, we did get pre-market economic data coming out. It appears better than expected, including core retail sales, initial jobless claims, the Philly Fed manufacturing index, and retail sales, and that is leading to a boost here right ahead of the RTH open. Looking for a continuation to the upside right now, again with the potential push into 55 half by the end of the week. If we take a look here at the NQ, another check mark continuation to the upside here. Not quite as strong as the ES at the moment, but still seeing quite a bit of strength overall. A couple of days ago, we also noted the 2-day narrow range and how we could see a nice breakout up ahead, and we've seen that breakout continue to play out. Nice little pullback. Bulls defended the morning low for a continuation higher, and we've seen this thing continue to push to the upside. We're looking for this thing to approach the FOMC key level again from July 31st here. That's going to be 19,431 half. 19,431 half could be the upside target here, perhaps later today or into Friday's trading as this market continues to stretch to the upside here throughout the course of the week. We could also be looking to the key range high up ahead over the next several days. That would be a 19,717 upside target. All right, taking a look here at crude oil. Crude right here has seen quite a bit of action lately, recently selling off quite a bit the last 2 days. This has been a strong low that's led to a big push to the upside here, falling just shy of our 80.62 target and pulling back here. This pullback could suggest a bit more weakness up ahead toward 75.91 below. 75.91 is the midpoint of the recent impulsive rally. So from the strong low here to that high, the midpoint of that range is 75.91, and that could provide another key range up ahead. So bears right now are looking to defend into morning strength for a shot at an inverted checkmark move downward. So keep an eye on the previous session's midpoint there. Previous session's mid is 77.97. If there's any early weakness at 77.97, 78, right? Prices above 78, that could provide an opportunity for bears to defend for a push lower into 75.91. Any acceptance beyond 78, that midpoint here, would suggest a continuation in the intraday time frame. So right now, keeping an eye on the previous session's midpoint for early directional conviction this morning. Looking at gold futures, this one's up about 0.4% right now, but off the highs of the day. On that data, that pre-market data, price dropped pretty significantly and is continuing to drop here at the moment. Put in a very strong high in all time frames, whether you're looking at the intraday time frames, 4 or 5 minute charts, 15-minute charts, 60-minute charts, and here in the daily, we have pretty significant rejections at the upper end of the range. Again, we were looking for a modest new high into 25.25 to 25.30. we just came shy of that high by a couple of points, hitting 25.20, and the recent high is 22.5. So just came shy of it, and right now we're seeing a little bit of a pullback. We've noted that this market tends to have some pretty deep counter trend moves right now, and if this thing is double topping up here, it wouldn't surprise if we drop back toward 2400 down below. So keeping an eye on this strong early developing high here. A failure to hold 2480 could start to open up a deeper pullback up ahead. Keep an eye on that strong high. Looking at the YM reached our upside target range, the low end of our upside target range yesterday, which was, again, from this 2-day narrow range. We were looking for a 750 to 1,000 point move over the next 2 to 3 days. From this low, pointed higher, we've already seen 1,000 points. That low right there is 39,344. Right now we're at 40,450, so that's an 1,100 point move so far over the developing 3-day range basis. We have also reached the midpoint of the impulsive move, so we have ourselves a newly minted key range. So from that strong high to that strong low, we have snapped back to the midpoint of that move. That's 39,984 here. And that gives us a new key range to work with moving forward, which could be very important in Q4 of this year and perhaps even into Q1 of 25. So right now, very, very strong price action at the moment. Upside continuation in full effect. Again, out of this 2-day range, we've seen a great continuation to the upside. We could be looking at a further move that takes us as high as 41,241 over the course of the next week as this market snaps back toward its upper FOMC key level. Looking at Bitcoin right now up about 0.5%, so a half of 1% right now, trying to hold the 58K level. This thing is still developing a narrow range, hasn't really found its footing too much, but it is clearly building energy. If you look at the 5-day range right here, that's the 5-day range, 1, 2, 3, 4, 5. It's a compression here, a 5,000 point compression, and this would suggest a buildup of energy for a bigger move to come, a move that could be as much as 12 to 15,000 points up ahead. That could be huge. And, you know, again, if this market can recover 60K and move higher, that could be a return that takes us perhaps back to 70K or maybe even higher up above as this thing continues to trade within its trading range. So continue to watch this narrow developing range here. We could finish the week out with a 6-day narrow range or perhaps even go into next week compressing. But we're building out a range that's similar to something like this and could see a nice breakout move up ahead. So buildup of energy right now. From a near-term intraday perspective, it's holding 58K as support and could be looking at a return back towards 6,200 on or 62K on a near-term basis. Lastly, ETH. ETH right now down about 0.4%. This one's also stuck in a narrow 5-day range. You can see the reading here. Over the last 5 days, only a 263 point range. The normal range on that would usually be around 700 points. That's 36% of ADR right now. And again, this buildup of energy could lead to the next key move ahead. If this thing can break through 2800, we could be looking at a move that takes us somewhere between 700 and 900 points of range up ahead. Doesn't necessarily have to break out today. It could continue to develop this narrow range over the next 5, 6, 7 days and then see movement. From a near-term intraday perspective, we are holding 2600, and 2600 could open the door back to 2800 for an intraday or 2-day test. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.